like to welcome my guest, Ashok
Hey,
Bhatia from Neuberger, Berman. And the interesting thing this week, obviously, is the aftermath of the catalyst being Turkey and then everything that happened since with regard to emerging markets. But in our off-camera discussion, this is really just about price, isn't it?
Yeah, you've had, obviously very sharp repricing in the currencies, but I think one interesting thing, we were talking about is the retracement we've had, from Monday and Tuesday. Turkey's currency is now stronger on the week. Mexico's currency is back below 19.
U.S. interest rates are
basically unchanged. So you've had this repricing in, emerging markets, and, it reflects some of the news that's obviously come out there.
Obviously, to everybody out there watching, the policy behind many of these issues is very important. But really, when it comes to trade, it really is about price. When it comes to investors, the people you work for on portfolio management, it's about the price. So financing changes when currencies realign.
Yeah, and I think this is one of the big implications we've had of the Fed raising rates. The cost of dollar funding is going higher, and that impacts long-term rates, it impacts commodity prices, it impacts emerging market currencies, and it's emerging market currencies we've seen this week. But that dynamic of the Fed's raised rates from 0 to, almost 2%, probably another hike coming, and it's just changing the whole financing dynamics for the whole system.
Let's say nothing in Turkey really changes. Let's say nothing in a lot of these hot issues really change. Does that mean the markets can't get calm and concentrate on something else?
Oh yeah, I think the markets, in our view is the markets will calm down.
Because it'll adjust to the new.
Yeah, the new price is adjusted. It's going to attract some investors. That's our view, that we'll see some investment capital.
Do many of your clients have money that they just don't care about? Wouldn't you say these times more than many times in the past, positions are fully margined, leverage is fully in, everything is always fully packed? So what happens when you get a repricing?
Well, I'll say the conversations with our investors are much more oriented around, particularly in the emerging markets, which is obviously the topic, how do you take advantage of what's happened rather than, say, panic and, deciding to exit the space. It's much more on the
And I think this is an important notion to have because the Turkish lira improved. Does that mean their management of their economy is improved or they've come up with really wonderful solutions?
No, it's, they've taken some policy actions. They're clearly trying to reduce speculation, or raise the cost of speculation.
For the most part, this is kind of self-adjusting in many ways.
The price adjusts and, it will attract some capital that views it as, better risk return.
Now, real quickly, we don't have a whole lot of time left. The yield curve definitely flattened a bit. The Fed could be drawn into having to deal with these issues with global volatility, even if it settles down, because there are issues with the dollar and their policy. Finish up.
Yeah, real quick. This is going to be one of the big things for second half is we saw a little bit weakish Philly Fed today. We've seen a little weakish housing starts. It's whether or not dollar strength and the U.S. economy, we're going to see a little bit of a slowdown and that potential spillback from EM, and how the Fed deals with that, it's going up as an issue for the market.
Watch the yield curve.